All right, Blake. So I wanted to get your opinion on something. We know that we've seen a lot of bank collapses really the last 6 months or so. It all started
Yeah.
off with SVB, Credit Suisse, and all of these banks. One of the things that I vividly remember in 2008 when I was just a kid was hearing this phrase, too big to fail, right?
Yeah.
And at the time, I didn't really know exactly what it meant. I was kind of like, well, what do you mean too big to fail? Any business, any bank could fail. But I actually found a graph that I think just summarizes this and theorizes this perfectly. I mean, in this case, you can pick out any single spot on this graph. And I'm going to start off with the bankruptcy, right? So, what basically happens is that these businesses and these particular banks become too big to fail. Then after that, they loosen their lending practices because there's no regulation. They're powerful. They know, hang on a second, we can't fail. So let's give money to people who really aren't qualified for it. Then after that, they get themselves into bankruptcy or collapse, right? Which we saw at SVB, partially because they thought they could just do any loan for any type of program they wanted. Then after that, it goes to national crisis, which the federal government has to, intervene in, and it actually lends financial support. And if you see it on the chart, we're at that point where
Yeah.
after the intervention and financial support comes the facilitation of mergers and acquisitions, which thus make banks even bigger, where they
Yeah.
loosen their practices and become too big to fail, waiting for the government, in essence, to bail them out every time that they come across a hard time. What do you think about this? Do you think that this is a good theory? And is this something that we are going to continue to see and have to deal with in the United States?
Well, I think it's absolutely correct. If you look back historically, really this whole story starts around 2008. And that was the year that we went into the, Great Recession, the financial crisis of 2008.
Hmm.
About a year before the housing bubble kind of popped. And as we know, the housing bubble is kind of the crutch of the market. As long as real estate is doing well, usually the economy is doing well. But when that popped, we saw the banks actually um, kind of do a run for their money. Basically, what happened is they were handing out loans like candy called subprime loans. They're basically underwriting loans, selling it to the government. The government would subsidize these loans, and that way they would be able to, get more people in homes, but perhaps
Hmm.
it was homes they couldn't afford. And so
Yes.
whenever the economy took a downturn, we saw real estate collapse. And when that happened, we saw banks collapse because they realized, wait, hold on a second. We lent too much money to people that have bad credit and can't pay. And now, when we're trying to foreclose or short sale some of these homes, our asset is worth a third of what it previously was. So they did some bad underwriting on the loans, which really prolonged the recession. A lot of banks collapsed. And like you said, a lot of these bigger banks came in and bought up small regional banks. And when they did that, they created a bigger banking system that was too big to fail. And so what we've seen
Hmm.
since then has been the government sustaining these businesses through, tax incentives, write-offs, and really when the Federal Reserve lowered their rates, these banks restarted some of their risky lending practices because they needed to make margin somewhere because they were
Hmm.
borrowing money for close to nothing, and when they're lending it out at 2 or 3%, they're not really making their margins. So they were giving riskier business loans and real estate loans once again. That started really when the economy was glowing white hot, right? So now we see
Yeah.
the economy slowing down. So we've seen 4 or 5 regional banks go under. We saw Swiss Bank go under. And basically, what's happened is Bank of America and a few other of the big banks, JP Morgan and Chase, um,
Yep.
just to name a few, Wells Fargo, they've went in and they've purchased basically the books from these companies or from these small regional banks, and they've consolidated everything into their banking system, which is
Hmm.
probably bad because it decreases competition, but it's also kind of to that point in the phase where, well, these banks are too big to fail. And what
Well,
happened in
and
2008? They did fail. The government
yep.
had to step in, and we had to, you know, um, break the free market to save the free market, right?
And
So,
and so a lot of ways, what I'm hearing is that it's not survival of the fittest. It's not survival of the bank with the best lending practices or a conservative approach to, trying to make money. But it's
yeah,
actually the banks that are the biggest, survival of the biggest. So we expect to see these big banks continue. And of course, you got to keep in mind as well, the more clients that you have at these banks, the more demand there is that money be insured through the FDIC and also past FDIC amounts, which is what they did on deposits at SVB. Really interesting when you see that there. I just constantly think about this, and you and I have this shared experience, right? When we were kids, we used to have a little kids bank account at Washington Mutual,
yeah,
and it was amazing how seamlessly they just jumped right into ownership, JP Morgan and Chase, right?
yep.
Like literally we showed up, they just redid the lobby area for Washington Mutual. And like 3 weeks later, you walk in and you can't even recognize the place that you just were. It's remarkable how quick these big banks truly do want to acquire and take over, and thus hopefully bring in more accounts in the future. Let me ask you this question, okay? And this actually goes back to 2008 and something that you touched on with the housing market, right? Is when they gave these loans, these subprime loans,
hmm
wasn't it Fannie Mae and Freddie Mac that made this able to be basically picked up and financed by the government? So, in a way, didn't the federal government cause their own recession? And is that what we're seeing happen this time with massive spending?
I think you answered your question. Yes, definitely it was government programs and incentives that definitely created the sporadicness of the market, which created, the artificial demand for these loans, which, in return made banks have to do these riskier loans. That's exactly what happened. The federal government started getting involved in the loan process in the secondary market, buying up a lot of these loans, and yeah, that's what created the problem. And are we going to see a repeat? It's hard to say, but we have seen the government basically guarantee all deposits at these regional banks that have failed, not just the FDIC of 250,000. They've been insuring all of the money in the banks. So if this becomes a bigger problem, are they going to have to do that for every account in every bank? Good question. And if so, what will that do to the dollar? Because we're
Yeah.
always constantly talking about the dollar on this program. What happens
Oh,
when they have to print money to be able to cover those deposits? How will that
mhm.
affect the value of the dollar? And I think it would be a pretty radical drop in the value,
Should
if you're
probably
asking me.
destroy it. Yep. And if there even was an economy left after that, what would interest rates look like? If you
Oh
think they're
boy.
high now, oh my gosh,
Yeah.
it would be insane, right? Just one last point to this, and I think that
Mhm.
a lot of people forget that this even happened because we are kind of locked up in our own reality. But in 2020, didn't we already see this happen with the COVID shutdowns, right? Instead of the
Yeah.
bailouts going to the bank this time, this is probably the one time that I've ever seen these, I guess, quote unquote, bailouts go to people. Some of it went to people through unemployment insurance. Some of
The
the rest of the
SBA.
funds, yes,
hmm
absolutely, the SBA, they went through small businesses, right? With the Small Business Administration giving
Yeah.
loans sometimes millions of dollars. I guess where I'm going with this is we still haven't recovered from the amount of cash that was thrown into the system in 2020. So when we continue spending at the government level, at what point is there so much money flying around in the economy that the dollar is worthless, right? Like if you have, you know,
Yeah.
$20 trillion in the economy, and then 3 years later you wake up and you have 60 trillion in the economy, let's say,
Yeah.
doesn't that
And
deface the dollar?
oh, for sure. It definitely. And we're in the process of seeing that now. That's why the Fed, no matter what they do, they're going to really struggle to get that annual inflation rate back to 2%. I don't think it's possible with the amount of dollars that they continue to print. It might be
Yeah.
possible if they shut down Washington D.C. and stop printing money, But as we know, that's not going to happen, right? Um,
Yeah.
so really, what are the options to be able to slow this process down? Um, really what the Fed is doing, raising interest rates, but that comes at the overall expense and cost of the economy. And that comes
And
at the expense of
ultimately,
jobs and everything like
yep,
that.
ultimately it comes and this is always the case. Something that I've realized is it always comes right back to the consumer. Because
Always
the
comes back to the
economy,
consumer.
the corporations, the banks, the car dealerships, they adjust, right? Whenever
Yeah.
inventory is at an all-time low, the prices are at an all-time high. Whenever money is harder to borrow, it costs more to get. So who ends up always paying for it is us on the end of goods and services that are, I guess you could say, provided to
Yeah.
us. So
And people call
remarkable.
inflation the biggest tax that there is because there's nothing you can do to avoid it. There's no tax write offs for inflation. You just lose that value of your money. You might have the same dollar amount, but you don't have the same value amount by the time that is done. And if this continues and continues and continues, which it honestly looks like it is going to, maybe not at 8%, maybe it's going to be 4% or 3% or 5%. But if it continues, the consumers are the ones that are going to be punished, like you said.
Um, Absolutely. There's no way that real wages can continue to grow past that inflation number, even if
No,
it is much smaller than the 7, 8, 9% that we saw a couple of years ago. I guess the saying is has to be updated: death, taxes, and inflation. The three things that you can't change, right?
there you
Blake, thank
go.
you so much for being here, man. Appreciate you.
Thank you.